couple of things as it relates to a fund manager. First of all, we execute exclusively on the Opportunity Zone legislation, as I may have mentioned, enacted in 2017, temporary legislation. So that program was and still is expected to expire at the end of 2026. What we didn't know, and so we're wrapped up in this political process, was whether or not it'd be extended and become permanent. So talking about macro political, it was significant impact on our business planning. In addition, of course, dropped down from the legislation itself and the viability of that ongoing program. We're a real estate investment firm, so obviously the rapid rise in interest rates was just, very substantial impact, material impact on our holdings. And now we finally get an interest rate reduction, so we're pleased by that. So, macro, one thing I would just say to emerging managers is, there's always a cycle. I feel that the cycle is compressed now. So in real estate, I would have said 10 years ago, it's a 7-year cycle. It's no longer a 7-year cycle. The velocity of change is constant. So if you're forming a fund, you have a thesis, just know that it's likely to change and be impacted by any sort of, macro, political, or exogenous event. But the rate of change is accelerating.